Okay, so today we're going to talk about something that actually happened in 2019, but I didn't want to talk about it until I saw how it was going to be handled. Yes, how it was going to be handled. So VA, this is a video about VA. So if you are not eligible for a VA loan, you may want to stop watching right now. But if you're eligible for a VA loan, please continue, subscribe. I've got lots of VA videos. Okay, so here's the deal. In 2019, the VA administration came out and said, you know what? 2020, no loan limits. And we're like, wow, okay, what do you mean by that? And here's the way it used to work. So it used to work that with VA, you could do 0% down up to the loan limit. Anything above the loan limit, the lender would do a worksheet to determine how much you'd have to put down, but you would be putting some element of money down. Okay, and we'd run into this in California a lot where the prices, as everyone knows, are extremely high. So we'd have veterans who may be buying a $700,000, $800,000 house, and they were putting money down even though they were using their VA benefit. Okay, so VA came out and said, you know what? That's over. So no matter what the loan amount is, the veteran can do it with 0% down. That's the basics of it, right? However, as we have seen with VA and with lenders, is just because VA says something doesn't mean all the lenders follow it. And it's because they don't have to. So VA says, here's what we require, but we understand that you may have your own parameters, right? That's why if you talk to some lenders, they may have a different credit score that they will allow with a VA loan. You have lenders that will go to 580. You have lenders that will only go to 600. There's some lenders that will only do 640 on a VA loan for credit score. The lenders are allowed to set this, okay? That's important to note because this is what we're going to get into with this. So when this came out, we weren't really sure how all the different lenders were going to handle it. We started to see kind of rumblings in December, but I didn't have a good view of what everyone was doing until now, which is February. And what I have found is that if you're a veteran and you're looking to utilize the 0% down on a jumbo loan, okay, if one lender tells you you have to put money down, it doesn't mean another lender will require that. Yeah, seriously. So some lenders, like for instance, I know that I can go up to $1 million with certain credit scores with 0% down, okay? But I know I can't do $1.5 million with nothing down. That's where our guides have been set. And other lenders have different guidelines where they may say, you know what, we're gonna still want a couple percent down, even if you're at 800,000 or even if you're at 600,000. So I'm seeing a bunch of different guidelines based on what lender you're speaking to. So couple really important things to note. Number one, is this even a good idea? It depends. So I would argue, because you get into this whole jumbo world. So let's just take, for example, $1 million loan, okay? Now, I would say that if you have, 10 or 20% to put down and you are not exempt from the VA funding fee, I would argue that a conventional loan is going to make more sense. And the reason I would argue that is because the VA funding fee is not cheap in any way, shape, or form. And I'm actually going to be doing a video on what those funding fees are. However, if you're exempt from the funding fee, it definitely can make more sense to utilize a VA loan than a conventional loan. It's really going to depend on your personal circumstance. Do you have money down? Are you exempt or not exempt? What's your credit score like? So you want to make sure that if you are looking at doing one of these loans, that the lender's looking at all options, because in some cases, VA is the clear standout winner. For clients who are exempt from the funding fee and they don't really want to put a lot of money down because maybe it's in investments and the stock market, wherever it is, they don't want to touch it, retirement. Cool, great, this is amazing. But for a buyer who's going to put down 20, 30, 40% and is not exempt from the funding fee, it's going to be pretty tough to argue that it's a good idea. So the important thing to know about this big change, right? It's a big change, like I never thought this would happen, is that lenders all have different guidelines on how they're treating it. So if one lender says no, don't assume they'll all say no. Do I think someone's going to do 2 million, 0 down, 580 credit score? No, I don't. I mean, if someone is, call me, tell me about it, but I don't think so. But, you know, if you're at a 620 or a 640 or a 660 credit score or under 700 and someone's telling you no, I'm betting there is a lender that will consider it for sure. So make sure you know that there's more than one lender doing this and we're not all doing the same thing. Rule number one. And then rule number two is make sure it makes sense. In some circumstances, this is going to be the perfect loan. This is a lifesaver. It's fantastic. In other cases, not so much. So you just want to make sure the lender you're working with is really doing the math with you and for you so that you can make the best decision for your financial future. So as always, if you have questions, comments, feel free to email me, call me. All these videos always have all the states I'm licensed in. So if you're in any of those states and you need a loan, please reach out. Thanks for watching.